And welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani. At the end of 2019, as it draws closer, we're recapping the year in ETFs. Not just which funds were the strongest performers, but which ones had the most impact on the ETF industry and the market more broadly. Joining me today, Todd Rosenbluth, Senior Director of ETF and Mutual Fund Research at CFRA. Kim Arthur is the founding partner and CEO at Main Management. Your votes for 2019 ETFs of the year, again, not necessarily best performers, which had the biggest impact. You like home builders.
Bob, I want to go with the home builders, ITB, for the following reasons. One, it's not sexy like the semiconductors where everyone likes 5G or some chatter around it. Beginning of the year, mortgage rates were just under 5%, and everybody hated the home builders because rates were too high. Then the second half of the year, recession fears kicked in, and everyone said, we can't buy a home builder because of recession fears. In the meantime, these home builders have clicked out a 50% return, almost 2x the S&P 500, and they weren't loved any of the way.
Mortgage rates below 5%. I just want to point out the passing of a friend of CNBC, Paul Volcker, the former head of the Federal Reserve. 1981, mortgage rates, 80 and 81, were as high as 18%. When I bought my first house in 1985, I paid 11% for that mortgage, for my mortgage. And today, if you go around telling people about 18% mortgages, the country would collapse. I know I'm being melodramatic, but what a change. And Volcker helped break the back of inflation. Of course, it did cause a recession. I remember President Reagan saying, when is it going to work, Mr. Volcker? And there was a little tension there, but ultimately history vindicated him, and that 5% being a good example of that legacy that he had there. Todd, you have something a little bit different. You are talking, tell us what you're talking about there.
Yeah, so BNDX, talking about bonds. So this has been the year of the bond ETF. Record inflows, over $140 billion of net new money went into an asset class that's roughly 20% of the overall market. BNDX is a surprise hit this year. International investing, sovereign bonds had negative interest rates for much of this period of time, and investors continue to allocate towards international bonds to round out their portfolio. Vanguard's BNDX has been the biggest beneficiary, the biggest, most popular product around, and it's extremely cheap as usual.
But if bond yields are starting to go up internationally, doesn't that not bode well for this, for the price of this index?
Well, obviously you get the benefits of that from a price return standpoint. So they're looking, the yields are going up and it's slightly more attractive. We think investors continue to be diversified, and BNDX is a great way of doing it internationally.